Welcome to this edition of Stock Market Pulse. My name is Eric, and today is Wednesday, March 23rd, 2016. And real quick, if you haven't gotten my 2016 trading plan yet, head over to the website at stockoptionassassin.com. Get your copy. This is a free 5-part video series that basically covers my entire approach to trading the market. So go check that out. And let's take a look at some charts. There's some interesting things going on. A couple weeks ago, I had sort of talked about the DMI oscillator, and tonight we're going to really focus on the weekly chart of the DMI oscillator. So I'm on a weekly chart here, and I'm looking at the SPY, and I have these little arrows here, and I'll explain that in a minute. But first of all, a post a few weeks ago talked about this upturn here, and when the weekly chart turned back up, we've had several weeks up in a row. And to be exact, we've had 1, 2, 3, 4, 5 weeks up in a row on the oscillator, and today's Wednesday, so we have a couple more days, so we'll see where this ends up, but we're starting to see this sort of plateau or flatten out here. Okay, so first of all, we filled the gap from the beginning of the year. So here we gapped down at the beginning of the year. We've recovered. So everyone's super excited that we're higher than where we started, but all that means we've really just filled the gap. I've also got this kind of trend line going over here. So I'm thinking we probably tread water here for a little bit, and maybe we can reach these highs. Although April's going to be, I think the bears are going to come back out in April. So we still have a week, but basically corporate buybacks are typically February, March, and April they're going to dry up. So given the overbought conditions, we're looking at some choppy water here, if you will. So, but again, let's go back to the oscillator, and I just want to go back to basically 2013. And first, I just want to look at the chart itself. So we had this is 2013, 2014. We had 2 years up here, right? And then 2015 was pretty choppy, and obviously 2016 is pretty choppy as well. But even though these are basically 3 different kinds of years, 2 kinds of years between there, where we have a trending up year, sideways dip, choppy year, and starting to look like that's how it's going to be this year. They're 2 different kinds of markets, but the beauty of the DMI oscillator is that you can still take some of these extreme signals and look to, if you trade it the right way, you can really kind of milk some money out of the market. So I'm going to kind of focus in on 2013, and what we're looking for is the last 5 times that the DMI oscillator has been up 5 weeks in a row. You've gotten a little bit of a pause for a few weeks or an actual sell-off pullback. And again, that's where we're at right now. Okay, we're up. Here was the last low. We came up 1, 2, 3, 4, 5. We're at 5, so we're looking at a potential pullback here, or at least some sideways action. So if I go back to 2013, you can see that we came up 1, 2, 3, 4, 5. And now again, very different market. It's very bullish, but even we got a slight tick down here. So if you look at those candles, we actually got after the 5th bar up, we had 4 weeks of sideways action. Okay, so if you're a credit spread player and you know how to trade that, this is a pretty much a no-brainer trade. You want to go a little bit out of the money, maybe 30 days out, sell a credit spread, milk it, and this actually came back and turned into a buying opportunity, and you close that trade. So even though it's a bull market, if you have 5 weeks up in a row on the DMI oscillator, then you're looking at either some sideways action or even a pullback. So let's just scroll through, right? So here was the next one. We came back in. We had 1, 2, 3, 4, 5 weeks up in a row. We ended up with a kind of topping tail here, kind of a hammer type formation. This actually turned into a pretty good sell-off here. But again, I wouldn't necessarily bought puts here. The safer play is to sell out of the money credit spreads. Okay. What I do want to point out here is that now that we know this is bullish, look what happens when we come into the 0 line. Okay, when the oscillator is very bullish and it comes back into the 0 line, this tends to be a buying opportunity the next time it turns up. So even though we sold off here, it's very bullish. We had a 6-7 week pullback, We rallied up to new highs. But again, we have 1, 2, 3, 4, 5 bars up. That is the top, the short-term top. We pull back, and again, bullish mode, pull back to the zero line, and we start to rally back up. It starts to get a little bit choppy, right? But again, what I'm focused in on is the 5 bars up for a credit spread selling opportunity. Now, for the next several weeks, we didn't really have that. We got 1, 2, 3, 4, 5 bars down. But again, remember, 5 bars in a row, that was the low, right? So this works to the downside as well. Let's keep going. Okay, the next time we had 5 bars up was November of 2014, and again we had a huge sell-off. Again, 1, 2, 3, 4. There's only 4 bars down, but 1, 2, 3, 4, 5 bars up, and again sideways to choppy action. So out of the money credit spread would have done pretty well. And let's keep going. Okay. This is a bunch of noise, right? So if you have watched my videos on my trading plan, this is the time I made really good money doing condors, iron condors during this type of choppiness period. That's covered in a course I have coming out soon on the DMI. But now, 2015 is a little bit different. Notice everything's below zero. So before, when things were very bullish and we came back to the zero line, it became a support buying area. Well, now it's a little bit different. Now we're very bearish. Here we got 1, 2, 3, 4, 5 bars up. But again, now we're coming into the zero line. The zero line starts to be resistance. Okay. We sell off again, 1, 2, 3, 4, 5 bars up. Zero line is starting to act like resistance. So what I'm looking at is credit spreads over the next couple weeks. You can do weekly spreads. I'm looking at, if you just kind of go into the April chart, I just have a 2-strike spread, even 23 days left. I'm looking at the 208s. You can do this on the XPX as well. You can try to spread this out a little bit, but I'm looking for something a little bit out of the money. Maybe the 206s, right? You get the 206s for 67 cents here. But if we come back in here, the 206s are here, the 208s are here. So you're basically selling an out of the money credit spread and looking for sideways action for the next couple of weeks. So hopefully you enjoyed that. I hope you kind of understood about my DMI oscillator. And again, the last 1, 2, 3, 4, 5 times the DMI oscillator has been up 5 bars in a row. We've had sideways to choppy action. And given the bearish nature of this market, I wouldn't be surprised for us to get a bigger move lower, at least back to that 13 EMA. So that's it for this video. If you haven't done so already, subscribe to the YouTube channel, and we'll see you at the next update.